Okay, so now I've switched over to the NQ here now. So same day. This is well, we're still on the 11th. Oh, we're just about noon hour here, so I'll push this off here now. Look, I've same setup, 60, 15, 1. Trend is what you see here. Trend is down, down. Well, you can look at the 200s. Trend is down, down, down. So I'm over here on the 1 minute here on the NQ. Said, and this is a tricky example. It's the kind of thing the market will do to make it difficult for you. But so note here, trend is down. Now I have this. I have the zones set to the entire zone, not just the wick. So what's interesting here is that there's a little break between the top of this zone and the bottom of this zone, which happens to be the opening range low. It's funny. It's just the kind of thing the market will take advantage of. So if you were sitting here and here's the current range. So come here. So here's the range we're in. Here's the last high. Here's the last low. So if we're retracing back, here's the 50,618. If we get up into the premium here, so you've really got an entire range here between two supply zones with just this tiny little pocket between the two. Let me play this forward here. So if you were leaning towards just staying consistent with the trend, we know its trend is down on 60, 15, and as well as the 1. So if we are retracing here, we'll just kind of draw it out here. Here's the move. Then we go through all of this chop, right? So guaranteed that's a squeeze. We're just chopping. It's about the time you'd look for maybe a reaction in the market as Europe closes. Now we've come up here. We've had this reaction to try and get, well, here's the 200, always a push once it breaks the IB. If they can get back in to try and get to VWAP, they can't get there. Here's a rejection back to the IB low. So if this retraces back here, this would be an area of interest. But note, you've got them two stacked on top of each other. We'll watch what the market does. So as we come back here, so now there's a toe in, right? So we're into the supply zone. Some will take it there because you'll note here there's a golden zone right there. So some might take it there. Ideally, you want to get a little bit higher. So look what the market does. So we go just I think that's 1 or 2 ticks past the pivot here, which gives us a change of character. It doesn't change the trend, but we go right up and we tag the opening range low, and now we get a reaction. So this is the kind of thing that it's just the market will do this. If your stop was 1 tick above this pivot, you just got nailed. Right now, how quickly can you come back in if you thought, oh, they just ran the stops? Because if you just look at it, right, you can kind of see what they're doing, right? So here's all wick up here. This is a stop run. So, right, of course, that's easy in hindsight, right? How would you know? Well, again, where's the trend? Where's the 200? Have we broken the supply zone? No, we have not broken it because we don't have a close outside of it. 30 is too fast here. So we see as we come out of there, so if you were that tight with it, now we got a demand zone that has to break. Target is the weak low down here, the internal low. Well, pardon me, the internal low is the first one. Here's the weak low because the trend is still down. So the market is now wrestling with that. You've had this reaction. We're coming down to this demand zone here. So does it hold? Does it break? Note golden zones here. You see the reaction, right? The algo fires. You get the reaction off the golden zone. We have not broken the internal low yet. Oh, eventually it'll get there. There's a little bit of an attempt to retrace. Here's the 50 of the next zone, but here's the supply zone here. Wrestling with that, we're going to come back to it. Well, we kind of waffle. This is very common to have a battle at the IB low. Most traders will know that. Again, you got a golden zone here. It's a micro golden zone that the market is wrestling with. So you got one golden zone here, one golden zone here. That's just software battling it out. So ultimately, you're trying to get at least to a break of that low, and there you get it, right? So what did you get out of that one? All right, so very possible you got stopped out once. You had to go again, and there's $745. So if you took a loser here, the key here is you had to be willing to get back in. Tricky, right? Just the gap is so interesting, right? It does the gap, right? The only little opening it had here, and it used it, came down. All right, let me keep moving here so we don't run for 3 hours here. So let me pause here and we'll come back. We'll look at a few more. Okay, here's another example I thought I'd share with you. For those, perhaps you're not in the States or you're an early riser. This is pre-market, but particularly with the Nasdaq, there's plenty of volatility of late. So let's just review this example. So this is about 7:20 in the morning. So just noting here as we look around the board here, 15-minute, the trend is down. 60-minute trend is down. Also note here, we've just tagged a 50 with the downtrend, right? You can look at the 200. It's interesting here. We're just coming up to the 200 here on the 15, but trend is firmly down, right? We can just see the sequence of events here, 50, 50. Now, so over to the shorter time frame here. Now, as I would typically do in the overnight, I'd use maybe a 3 or a 5 minute. So just so I don't get in the chop and the noise of the overnight here. So 5-minute works pretty nicely here. You get a great example here of a flip, of a chalk and a flip. So we are trending higher here. You can see all the little micro breaks here. So we've got all the changes of character here all the way up where we tag. Amazingly, we tag this zone here, get right to the absolute tick high of it before it gets a reaction. You get a change of character here. Now note here, these are all in 5-minute because I'm on the 5-minute here, so it's keeping track so you don't get lost on what you're looking at here. But so here's the ideal scenario that we look for. Here's the change of character. Now we're back. Now we get another change of character. So currently the trend is down. We've left behind. I have it set on wick only, but the upswing here is from this pivot low of this up bar through the wick high of the sell bar here, because this is all up move before we start down. So if I'm bringing this back to lay it on there precisely here, and just I like to draw them myself because I can know where it is because I see the wick. So again, everything's in sync. Now I am above the 200, but note here the 200 and VWAP are right on top of each other here. But we have had a retrace where here's the premium zone. Well, here's the 50 of the swing structure. So we're well into the premium zone. Let's bring this over here. So 7:20 a.m. in the morning, right? All three trends align. We got on 20 here. We'll speed this up here. Get a nice reaction out of it. A little tap. Start to move. Looking good. So next up, what happens at VWAP or the 200 EMA? Oh, maybe we'll speed it up a little bit so I don't have to sit for too long. All right, little retrace. Starting to pick up some steam. There's the battle at the 200 in VWAP. Starting to accelerate now. Here's an obvious target down here at the low. Well, I wouldn't be disappointed here. All right, now we're approaching the low. There we got it. Okay, so what did we get there? That's assuming you're not going to get tick to tick. That's $1,400. Not a bad way to start the day. And again, it's nothing fancy here. Just, where's the zone? Where's the trend? Where's the trend on the 15, the 60, and in this case the 5-minute? Just a perfect example. Now, just a reminder, I fully experienced this myself, right? We all do. The market has gone down. Now we're screaming back up. Makes that trade. What gives you the conviction to take that trade? It's hard to take. Right, the market's ripping high. I mean, it's probably it's a $1,500 move up. It's $1,500 down. Right, we're screaming higher. It's almost the crazy thing about this. You need that to happen. You'd prefer to not have this meander for a long time and finally work its way up and get there. You'd rather have it come quickly, because what's happening here, well, you can just look at it. Right? This moves so quickly, you can certainly deduce that there's a high probability you had some unfilled orders here as this came back here, and if anyone who sold here with muscle is going to defend there. So up they go. All right, you don't have to sit there with a limit order, but once you start to see a little sign of some weakness here, or you might even take it down to a lower time frame. Maybe you're down to the 1 or the 2 minute here off of the 5. But boy, I mean, you can't script them any better. Right to the target, and what are we hitting here? And now we're hitting the 50 from this zone. So just a great example. I mean, literally right out of a line drawing is what you're looking for. Right. So all right, let me keep moving here. We'll look at a few more, and then we'll wrap this up. Okay, I'll just fast forward here to later in the week here. We'll wrap up with a couple of looks here in the NQ. So this is 10:45 a.m. on Thursday morning. Just look at, so of course, let's check, right? 60-minute trend is down. We can see what just happened here. This 15-minute trend is down, right? So well below the 200 EMAs. Here's the 200 and the VWAP here for the 1 minute. Let's go have a look over here. I have it now set. I'm showing you the full zone here for a good example. So 10:45 a.m. we've just pinged. Here's the IB low, right? So there's your IB low trade, right? If you don't know what I mean when I say that, the first test of the IB, after this video, you need to stop and go be sure that you watch the IB video. That's the easiest money on the board day after day. Okay, let me just play forward here with 100. That's probably too fast here. So as we can see here now, as we look at the 1 minute here, obviously trend is down. Right, break of structure, break of structure. We've just had our third break of structure here, and of course now you see the reaction here. We're coming into a demand zone that's way back from the prior day. So do we want to be a buyer there? Well, the only reason I'd consider being long there is because of the IB trade. And again, if you don't know that, be sure to watch that video. So if we pop back here, where's my little draws to? I mean, here's the zone that we left. Now I'm getting a reaction here, so this is a little bit of demand zone, supply zone, ping pong. So if we come back into this area here, I'm going to be interested for a potential push lower. Here's the weak low. If I can get down, well, that would be the first target. If we can break that, we'd have to re-break the IB, which is never an easy task, and you've got multiple demand zones here, but the minimum target would be right there. All right, so let's just play this. 20 probably do it. See how we do if we come up to that. Now, well, here's the 50%, so we just get a little tick into the premium zone. Here we get up, so we're through the golden zone here. There's our 618, so here's our halfway. Let's see as the market moves away from that, you get a pretty nice pop, and there's your break. All right, so market moves into this demand zone, into this supply zone here. What do we get out of that? All right. Well, let's assume you're not going to get the tick high. Well, there's $850 right there as it pushes back down to this demand zone after breaking the IB, where we've got a potential double bottom there. But you've got there again multiple demand zones here, and then more down below. So you'd want to be mindful of that. But this is just a great example to re-emphasize how we want to be looking to be in sync with the higher time frames. Right? Trend down, trend down, trend down. I get a retrace into a supply zone here after this little push at the IB. Quick. I mean, that's again, you know, it's just, again, so you didn't get all of it. I mean, even if you took it to the IB low, there's $530, right? If you got to the target low, there's damn near 800.